right, hello and welcome to another Expert Insight interview. My name is John Golden from SalesPOP, online sales magazine, and Pipeliner CRM, joining you as usual from a sunny San Diego. And today I'm delighted to be joined by Gregory Kovsky, who is up in Seattle in Washington. How are you doing, Gregory?
I am wonderful, John.
Yeah, and you are the president and CEO of International Business Associates, IBA, the Pacific Northwest oldest and largest business brokerage firm, founded in 1975 with more than 30 years of M&A intermediary. As an M&A intermediary, you've personally facilitated over 300 sales of privately held companies and family businesses, many bundled with commercial real estate, ranging from 1 to 30 million in enterprise value. Okay, so Gregory, if I own a business and I'm thinking about perhaps selling it, what are some of the things I should do even at that point, even the moment I start thinking about selling a business?
Great question. So, the first thing to think about is what do you want to achieve? Is it a financial outcome? And do you have a specific value in mind? Is it freedom?
Hmm.
Very often we work with founders who are ready to do the next thing or wish for more freedom. Um, really define your objectives because you can't start a journey without a
Hmm.
destination.
Right. So and if you the people figure this out or maybe start that intellectual journey of like, okay, I'm going to sell the business. How do you help owners then separate? Because obviously they have deep emotional ties to the business. You know, there's a lot wrapped up in that. How do you help them kind of separate the emotion from the business decisions the practical decisions they have to make?
Excellent. So, the first thing we will do is provide a professional opinion of the value of the business.
Hmm.
And we will look at it from different perspectives, from a strategic buyer to a
Right.
private equity buyer to a high net worth individual who can scale it from where it's at and take advantage of appreciation opportunity. We'll then also have a discussion with them is what does their successor look like to them?
Ah.
If they have a lot of intellectual property, are they okay with merging and eventually disappearing? Or do they value keeping employment for their staff? Do they have concerns about their customers' well being? Do they have relationships with vendors who are
Mhm.
part of their ecosystem that could be detrimentally impacted if this business stopped being operational in, we'll say, small town USA, where it's a
Mhm.
foundational employer?
Right. And obviously those are things that if you overlook any of those things, they could derail the sale of a business quite easily, right?
Correct. I mean, many times focusing on employees, their extended family.
Hmm.
You have seen them progress professionally. You watch them get married, have children, maybe even approach retirement with certain people. And the last thing a founder owner ever wants is to be going out to their favorite diner and run into a former employee who comes over, gives them the stink eye, and says, "You did great. I was let go 3 months later and my family's in turmoil right now." I mean,
Yeah.
those are the human sides of M&A. People always focus on the bag of gold, but
Right.
I'm more of a holistic M&A broker and trying to create win-win outcomes and make sure all the appropriate elements are at least thought about before decisions are made.
Mhm. Debbie, what do you see the biggest mistakes family business owner can make that maybe perhaps could kill a really good deal?
Sometimes they go down the path of an internal sale, either to family members
Uh-huh.
or to employees in an ESOP. And
Mhm.
I'm a strong believer employees are often employees for a reason.
Mhm.
And not everyone is destined to be the captain of a ship. They may be an amazing CFO or chief
Right.
marketing officer, but they don't, to use a baseball analogy, as we come into baseball season, they don't have the five tools. So if you don't pay attention to the nickels and dimes, you can have a business lose profitability and struggle. On the same side, and this is your background, sales cure most ills.
Yeah,
So
yeah.
if you back away from marketing and paying your top salespeople who are the rainmakers,
Mhm.
for a short period of time, you may be very profitable. But in the long term, there's going to be attrition and probably loss of market share.
Yeah, yeah. No, absolutely. Those are good points. And yeah, you're right. I mean, the idea of an employee or a management buyout sounds great, but it may not be, as you said, they may not have the skill set or the wherewithal to be able to be successful. But so what are some financial or operational metrics that will move the needle for your valuation?
Certainly. So the first thing you want is clean financials. You
Mm,
want them to be able to pass scrutiny by a buyer, their CPA, CFO, a bank, or investors.
mhm,
And sometimes we recommend take a year to get your business ready for sale. The most important financials is the last year's tax return. And if you're writing off expenses through that may be gray, you may want to clear up the picture. And it could be season tickets to athletic teams
mhm,
that you have great seats, you never take a customer, but being able to convey that those had no business purpose may be problematic,
mhm.
or overpaying family members who provide less than contributions in line with their pay. Those sort of things, you want to clean up financials because there's a compounding impact. Let's say we're dealing with a 5, 6 multiple of EBITDA in sale.
Yeah.
If there's $100,000 that is buried in the financials, you're giving away $500,000 potentially of enterprise value. So
Right.
you need to think ahead. You may be saving a third of that. So on that 100,000, you're saving 35,000 by running it through the company. Personally, I'd rather a 500,000 than 35,000 in savings, but those
Mhm.
are type of education. And then having systems and processes helps things. Do you have a sales manual? Do
Mhm.
you have a current employee manual, or is a third of it dedicated to COVID, which is no longer applicable?
Mhm.
Um, do you have systems and processes? Do you have a vertical management structure rather than a horizontal one
Yeah.
where everyone is reporting to you and you are pulling all the key levers? All of those things go into contributing to value in a business for the maximum amount.
Yeah, because let's face it, I mean, you want your business to be as easy to acquire as possible by the acquirer, whatever your target acquirer is, like you said, whether it's private equity, whether it's whoever it is, but you want to have it as clean as possible. I think on the financials, that's a really good point because if if there's going to be a lot of due diligence around the financials, right? And if there's some anomaly spotted earlier on, that just invites even more scrutiny, right? So you're better off trying to get things as clean as possible.
Well, and not only are we concerned about discretionary expenses like the sports tickets I
Yeah.
mentioned, but it also can be non-reoccurring expenses. Right
Mm.
now, we're in AI world, and people are doing AI initiatives to modify their operations. Well, you may have had an expenditure in 25, 26 to promote that evolution within
Yeah.
your company. But it doesn't mean you're going to have that same level of expenditure in 2028. So, I mean, I know in our case, we're working on an AI enabled deal management platform.
Mhm.
And we're very excited with what's coming down the pipeline. But in the future, it'll be fine tuning the wheel. It will
Yeah.
not be creating the wheel.
Yeah, no, absolutely, absolutely. And tell me another thing too. I think when people sometimes when they come to the decision that they're going to sell the business, time frame is something that maybe they're not as aware of. So tell me, say if you're a $5 to $50 million private business, what's a realistic time frame?
It generally takes IBA somewhere between 6 and 12 months to
Mhm.
sell a business, but that's not the entire time frame.
Yeah.
The buyer is going to negotiate a transition period
Hmm.
from executive management, including the owner, to make sure the transfer goes smoothly with minimal turbulence. So we have seen 3 months to 3 years commonly negotiated to
Hmm.
make sure the transfer goes smoothly. And so if you're 70 years old and you want to be retired by 72, you better start moving that train because it's not going to just happen overnight. It's not a mic drop situation because you need to teach a buyer how you did things in the past and set them up for success and do warm introductions to employees, to customers, to vendors. If, for example, you're manufacturing component parts overseas, there may
Hmm.
be need to take a trip to that facility and introduce the new owner, maybe prior to the sale, maybe post sale, to the parties on that relationship. Right now, I'm dealing with a sale of a company that's been manufacturing component parts in Taiwan for years.
Hmm.
Well, how are we going to facilitate that? Because the new owner can't lose that relationship.
Yeah. No, those are really excellent points. I mean, because at the end of the day, those are the component parts of the business of generating the value. Um, uh, the other part too is I think people don't always understand there are many different there are many different ways the deal can be structured, and I think that maybe takes people by surprise sometimes. Ideally, you'd love somebody to jump in and say, "Here you go, Gregory. Here's cash for your business. Have a nice life." But that doesn't happen very often. I mean, you have some cash. Maybe you have earnouts. Maybe you have equity. Maybe if it's bought by a private equity company and they're going to sell it on again in like 3 or 5 years. Maybe you have a whole period too so there's lots of different, and I think that's often an issue, isn't it, when you begin the conversations, that people don't understand that different buyers may have different deal structures in mind.
Correct. You did a good overview of that. Um, there are a number of deal structure elements, and everyone always loves cash.
Yeah,
You
yeah,
want,
who doesn't?
but you need to realize the next circle out is a seller note or an escrow holdback,
Hmm.
and a seller needs to understand why that exists. Usually, that exists to deal with trailing liability.
Hmm.
If you're a manufacturing company and you have some warranty issues or recall issues, if the previous generation of owner received the money and the benefit of those sales, the new owner shouldn't have to take it in the shorts to
Yeah.
satisfy a customer, which it could be 1 out of 1,000 products have some sort of issue, and it involves replacing at pretty low cost a widget that's part of it
Hmm.
because the manufacturer you bought it from had a bad batch or whatever existed, and that's life. But you've got labor and materials and shipping, maybe customer service. So you need to have a methodology to address that. And you want to have some sort of leverage for the buyer, either an escrow holdback or a promissory note, where if the buyer buys it and the seller disappears to Hamilton Island in Australia and you can't find them, that you can make good on that scenario.
Hmm.
And so that's valuable. And then you get into the variable elements, which can be an earnout. It could be an excessive promissory note with
Right.
what we call a clawback, which
Hmm.
is if certain thresholds are not met, principal credits are made against the note. And banks often like that because they can calculate the maximum debt service at time of funding because banks don't like variable amounts. There can be retained equity or profit sharing, and those can end up being very positive in that I have seen situations where a seller bets on the right racehorse and the
Mm.
second bite of the apple exceeds the first bite of the
Right.
apple because, for example, a private equity firm is rolling up businesses in a space, and we'll say they bought your business at a 5 multiple of EBITDA
Yep.
and now are selling the whole package at an 8 multiple of EBITDA, and your equity share is calculated now at that greater valuation.
Yeah.
But you need to make sure you bet on the right racehorse. We've also seen situations where, for example, Joanne's Fabrics or different private equity bought entities have not thrived post sale.
Right. Yeah, yeah, and I think that's great what you outlined there. That's great information because I think it's a good thing for business owners to understand that there are, there are buyers and then there are deal structures, and finding the right buyer, finding the right deal structure. There's a lot of elements that you have to consider. Like you said, I mean, if you're older and whatever, and an earnout may not be what you want to do, maybe it's fine, but maybe not. Maybe, maybe a long hold period is not something that you want. So you have to, obviously, there's a lot of things to consider. Quickly, one last thing I wanted to deal with is the real estate, the commercial real estate piece. So if you own your own building, right, and you're going to sell that as well, what are some of the what kind of due diligence and what are some of the pitfalls to look out for on that?
Let me take one half step back
Yeah.
and then I'll go forward. One important collaborative partner in the sale of businesses is your wealth advisor.
Mm.
And they can provide tax mitigation strategies. And where it dawned on me, when we're talking about retained stock, you may choose to put that stock in a trust
Yeah.
or an entity where your children, grandchildren get the benefit down the line if you're older and tax issues are deferred. And when we get into real estate, it can be situations like 1031 exchanges, which can defer the capital gains taxes. So it's always wonderful to own the real estate, you control your occupancy. I've seen situations where people bought property in the outer circle of a metropolitan area,
Mhm.
owned it for 20 years, and what they've gained on that property is substantial. But let's say it's a manufacturing company, something I specialize in, and it's a single tenant situation. So you may not want to have the risk of retaining that property for the rental passive income,
Mhm.
because the one thing we can't sell is the executive management of ownership. The new owner will be better or worse, but you may want to employ the 1031 exchange and take the value of that real estate and maybe put it into an apartment building or a medical office
Mhm.
complex where instead of one tenant, you have numerous tenants. So you end up diversifying your risk. You can hand over management to a professional commercial real estate firm. And
Mhm.
it could be a wonderful step in building legacy wealth. But you need to think about this. And as I said about the wealth advisor, you need to build a transaction team, which is the attorney, the CPA, the wealth advisor, the M&A intermediary, to make sure you are being properly advised in
Yeah.
all those important domains.
Yeah, and fantastic, Greg. I think I mean, you've shared such great information today, but I think that last one is something that needs to be underlined. You know, 4 or 5 times is having the right team, is finding the right, not trying to, you know, this isn't something you want to try and attempt on your own or try and attempt with less than high quality expertise around you.
Exactly. And that's where my firm, every broker has also a real estate license.
Hmm.
The one thing we offer our clients is under one umbrella, you can have comprehensive representation in both the business and real estate asset. And the other thing to think about is limiting the number of cooks in the kitchen.
Mm.
The owner needs to realize they are the owner of the team, and you need to have control because you'll have strong personalities. I'm a strong personality. I'll have business advice to get the deal done.
Hmm.
The attorney will have advice to mitigate liability. We may not always be in agreement on the correct position to take. And ultimately, the founder owner, who is likely risk acceptant because they are an entrepreneur,
Hmm.
will say, I'm going to do this and lean into my M&A advisor. In other cases, they may say, Gregory, I understand what we'd achieve with that strategy, but that's too much risk for me. I don't want to carry
Yeah.
that much of a seller note or that much equity share. I'm going to listen to my attorney and mitigate the risk. But you want the counsel, you want the flood of ideas and options on a whiteboard, and then you make the selections that are right for you.
Yeah, absolutely. That's very well laid out, Gregory. Thank you. Hey, this has been great. I mean, you've shared such great information and insights here. All of Gregory's information will be below this video. But again, before we go, Gregory, remind people about what you do and what kind of businesses that the right profile of business for you.
Certainly. So IBA is a Pacific Northwest based business brokerage firm. We have 10 offices throughout Oregon and Washington. We represent the seller side of the transactions on 100% performance compensation model. So you don't pay us a penny unless we sell your business. We represent technology, education, manufacturing, marine, service, etc. About 20 different industries. Enterprise values up to 30 million.
Right.
starting at about $1 million of value. I believe people who, let's say, have earned or created a income stream of $250,000 a year, they have succeeded in America and they deserve representation and they have something of substance to be sold. So where some investment banking firms will not go as low as we will go,
Mhm.
I believe someone who's earning several hundred thousand a year has built something of worth and deserves professional representation.
Yeah, absolutely. I think that's fantastic. And obviously, I mean, founded in 1975, you've got a little few years of experience under your belt, right?
Exactly. I've been doing it for 32 years and what delighted to be the successor to the founder, Bill Osofsky.
Mhm.
I bought the company from him as one of his top performing brokers in 2000 and in my 26th year at the helm.
Fantastic. Well, that's an amazing achievement. Congratulations. So again, thank you, Gregory. Thank you for watching and listening, and we'll see you all again very soon.